Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning, afternoon, or evening. Good night, whatever time it is in your time of the world. Hello, 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 and welcome back to the stream. Today is Thursday, the 15th. So we are here in the AM session. We're looking for trades, obviously. And yeah, we are trading our 100K Blue Guardian prop firm account. And we're just going to bring up the Guardian dashboard quickly so we can get our protection up. Protection is important. Seeing that quickly. And while this happens, let me just drop some music on everyone. I actually like this one today. And then we'll bring up the markets and then we'll see what we have. Right now, I'm actually just checking the market out and I'm looking at the gap and it's interesting. Oh, hello. Hello, hello, everyone. Welcome, welcome, welcome back, welcome back. I love seeing this, love seeing this. You're new, Hazem? Welcome, welcome. Welcome back. What's going on? Okay, let me just say that on my Blue Guardian, I'm long NSD USD. Could you give me a good take profit level? Tom! So I don't actually trade New Zealand dollar, just because the spread on that is a bit wider than I would like. I like tighter spreads, obviously. Euro USD has almost zero spread, and that's the reason why I trade it. Okay, what do we do? So in regards to this, again, this is all just entertainment. Short GU here. Interesting, interesting. Let me actually bring up the chart quickly. Share screen. Here we go. Window. Bang. There we go. Okay, so what we are seeing right here, right now, let me just change this, is that we have our opening gap. It has filled just a little bit. There's still a lot of space over here for it to come in. We have our times as usual. So we have our 259, which is right there. Closing of that candle. Okay, and then we're setting up for our Hong Kong gap. This over here is our opening gap. And we correlate that and cross it over to Euro, which if you see on the DXY, the time there is 6:04 to 7:45. Every day is generally the same. There'll be some days where it's not the same. All right. And we have 6:04 closing until the 7:45 opening. That there is a complete void. As you can see, DXY is mirroring, or Euro is mirroring exactly what DXY does. This is our opening gap right here. Opening gap right there. All right, done. So we have our times. Yesterday was FOMC. That's what this big leg is over here. That was a big leg. And then it came in, did its shenanigans. And obviously, if you were taking the New York PM session, you would have waited for this to play out, and you would have taken the fair value gap, the first one that was created, after the 150 to 210. There's a trade, and then it kicks in at about 230. So same thing as what we do now, is we're waiting for 850 to 910. And anyways, yeah, so you could have taken that as a long position with your stops. So this is just a PM, the PM idea, okay, and it goes to a 4, which is average. Okay, it's normal. Let's just review price action because I wasn't actually trading London. So as we spoke about yesterday, see, price came down, went up into that Hong Kong gap, perfection, came down, did its thing some more, did its thing some more, and came back to the opening gap. And then at 3 o'clock, it decided that it's going to rip higher and carry on going. And this is all FOMC liquidity, of course, because it's a big news event. Hello. Welcome back. Is this real money? First stream. This is a prop firm. So what it is it's a prop firm is basically companies that provide traders the opportunity to have you pay like a little bit of a fee, and you get access to an account. And these accounts can be quite large, but you have to pass challenges. So this is a challenge account, and the aim obviously is to pass the challenge. There are 2 steps. We have our first phase, which is I have to make 8% on the account. So it's 100K. I need to make $8,000. I have a daily drawdown of $4,000 or 4% of the account, and a max drawdown of 8%. And I have infinite time. So where we right now, we're removing this, and we're going for our 259 closing. It's right there. And I'm also looking, because of its FOMC, I'll be looking up here at 12:30 open, 12:30 p.m. Okay, it's interesting because this liquidity needs to be mitigated in a sense. Doesn't necessarily mean it's going to. But again, we're waiting on my trade, which is at between 850 and 910, of course. Again, from there, so I'm just going to put that around 9ish. At 930, we might have. If the move hasn't made here and it continues like ripping higher, for instance, then what we're going to have is at 930 a possible entry to go lower. That just depends. Of course, I remember you, Rampy. Of course, I remember you. It's been a while. Thank you so much for joining in. So all I'm expecting again is for this gap to act as a target and to be filled. This whole gap over here, okay, with this yellow box, that needs to be filled. Okay, if you're on the stream yesterday, you would have seen that the times and stuff that I presented and the trade ideas that I gave offered the exact opportunity at the proper times. And again, if you do your back testing, you'll see that it works. NEB, welcome back. It's good to see you around. Let's go on to GBP. Same thing happened. You see here, the Hong Kong gap, it just bounced around inside the Hong Kong gap, which is great. And at 3 o'clock, it decided that it's going to fill the rest of it in. And it continued going higher. AUD. Where did FOMC go to? What a shock. What a shock. Yeah, no, it's not a shock. Just saying no. It happens every day. FOMO no bueno. It's good to see. It's a good question. You go live every time you trade. For this challenge, I'll be going. I'm only taking trades in Asia. Okay, I might rant sometimes if I see a good opportunity to take a trade in London if I have the time. I just have a family and stuff that I have to look after, so I don't have the opportunity sometimes to be consistent. It depends on if my child's sleeping or whatever it is. So it can be difficult sometimes with the child, and that's okay. Children are a blessing in our lives. I love my child so much. I couldn't ask for anything better in my life. Really. Love my family so much. Anyways, enough about that. Let's go back into what we're doing. We're busy marking up the charts again. It's a quick markup because we don't have as much time. We've got 18 minutes, or actually it's 8 minutes until our trade idea should present. And we'll just mark everything up. 259. And that I've already labeled as my opening. Should be. Oh, looks like it's gonna be a big gap today. Yeah. Alright, Alex, I'll see you later. GBP, let's label all that chart out. It's all the same thing. You literally do the same thing. All the different charts. 04, closing, 745, should be up here. On the dot. Opening. So as we can see, GBP is filled in, AUD is filled in, Euro is not doing that. So that's an interesting when you spot that. Look how price is reacting perfectly at the bottom. All right, and then we have our 259 is right here. See, price hovered down here, perfection, coming up, bang, 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 comes up, taps it, goes down. Shocker. So DXY is filling, Euro is fighting. It's fighting. All right, so how are we all doing today? How's everyone feeling? Did any of you partake in the FOMC madness, the insanity that is news? There were some questions before. Hold on, I'm gonna be coming back to these questions. Good morning, good morning, good morning. Terry, what time is it? Right now for me, it's 10:45. So I'm just going through all the questions again while we're waiting on price to do its thing. you can see again, if you, with my idea, you have 630, which is in the zone. That's why I mark out 630 to 730. Okay, that box there, if I go into the side and I have the high of 630, the highs and lows of 630 to 730, which is over here. Okay, so the high of 730 is over here. That has been seen to. So that is my 730 buy side, 630 to 730 buy side. The lowest low is down here. Okay, so that is now my 630 to 730 sell side liquidity. Okay, and that needs to be, these areas will be seen to. Okay, how it gets there depends. Oh, Hugo, you got beat up on FOMC. I'm so sorry to hear that. I'm so sorry to hear that. If you're on my stream yesterday, you would have heard what my bias is generally throughout the day. So my bias is always the opening gap for the day. Always. Doesn't matter what session it is, I target the opening gap. So yesterday, here was the opening gap. Asia came back into the opening gap. London came back into the opening gap. And you had New York over here. So it went up, and then New York had to come back to the opening gap. So kind of it was almost predictable in a way. If you saw this, it came straight into the opening gap, or the Hong Kong gap that I call it. And every session did the same thing. Asia came down, did not fill the rest of the opening gap. So that's why this had to completely fill it in. It's a pleasure, Neb. No stress. I'm glad. It's not as difficult as it's made out to be, and a lot of people get offside a lot because they don't have a clear bias in mind. Okay, what we need to think about trading is, I'm just seeing what's happening over here. I'm putting this up as we get there. Because Euro still looks like it's fighting. To me, honestly, it looks like we're going to go for either this over here to fill the rest of this in up here, possibly even to seek the highs of yesterday at 12:30 to come down. That might be like a London move. I am looking for sell side because of all of this stuff over here that happened over there, and also, especially on Euro USD, this gap was not seen to. For Friday, again, like I said, I am expecting the MMG down here at 0.71, let's just say 0.7200 to kind of get filled. But we also have buy side in that. There's buy side MMGs that have not been filled either. Let's just have a look. Right now we're sitting within an MMG actually. Which one is it? It is Wednesday the 17th of May. That's the MMG that we're sitting in right now. And there is a lot of liquidity on the sell side. Like a lot of liquidity right now. It's actually mental. Yeah, almost 950. Let's get ready to see what the chart's offering. No stress, Alex. I am. And let me remove this. And present broker window. I'm looking at 3 different instruments right now. I'm looking at Euro, I'm looking at Euro USD, GBP USD, and AUD USD. again, I try to stay away from the exotics. I think New Zealand is kind of an exotic in a way. There's not enough liquidity because the spread is a bit high. Okay, let's zoom out quickly on these charts. As you can see over here in the 1 minute, it's kind of built up, it's doing things going higher. We have this pushing lower, and we have AUD also. It's set up a really nice range over here. AUD is going to go lower. If you see this little section right over here, that spike out in liquidity, that's a target. Okay, right there. At 67842, that's a target. It will seek that. So again, that's interesting. I'm actually thinking, I'm looking at sells. So what we have is Euro is coming down. We have GBP also coming down, but not to the same extent as this. And because again, it hasn't given us enough range right now at 850 over here on Euro. Just hold on, let me just get the measuring tool quick. There was not enough range on Euro again, and GBP is already through the gap, and AUD is already through the gap. It's frustrating. Yes, Alex. So with trading, you're basically just trading two instruments against each other. You're seeking the differentials between the price of different things. So you could be trading currencies, you could be trading commodities, you could be trading indices, and you're just trading the difference between the two pairs, the two pairs exactly. Because GBP and AUD are pushing down, that is telling me that Euro is gonna drop. And what we have is we already have these voids have all been seen to. Price behind it. That's interesting. Yeah, everything's pushing. You see what's happening. Watch how Euro here is going to follow what the other pairs are doing. You're like they love to do this. What they do is, this is a unique thing with Euro, is that it'll stall and it'll get people invested in buys and sells. All right, so people are confused. They don't know what's going on. That's why we have these other charts open, because this big spike out right now, I would like to see it actually come and target that. AUD, AU, we'll be around there. Now DXY is filled completely. Ooh, and this price on DXY down here, there was a tiny little gap left by there's a tiny little gap that has been left by FOMC on the DXY sell side. Later on, what we could be looking at is possible buys on the other currencies. How frustrating. It's happened almost every single day this week where it's filled in before I would want it to. Okay, Tom, you were talking about perfect price action. So, perfect price action, the reactions in price. We're just watching the sell unfold. Yeah, it's coming. Everything's ripped. And Euro is resisting. It's resisting. This, in my mind. See GBP here? Watch this. I'm gonna go right there. So yes, we're talking about perfect price action. Perfect price action is basically set up. There's little boxes in price. Okay. So how I see these boxes is if you look at the one you can see in the 1 minute chart, we have this area right here. Right there. How perfect that is. Okay. That is literally a perfect box. That is a target. Every time you see perfect boxes like that, here, 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 this is all a target. See it over here. This is perfect price action, consolidation. Price will push away and go towards it. It happens every, you can't see it very clearly, but over here, you can see here, perfect price action. Price pushes away from it and then targets it. Now you can see this on every single time frame. Okay, here it comes, the Euro sell. Zach, I am on Twitter. And no, I'm not here to tell everyone lies. I literally just, my handle's at Gentsla. Literally, the only Gentsla. So Euro still needs to fill in that gap. DXY's completely filled it. GBP's filled it. AUD has filled it. Euro is restraining itself. What I'm kind of expecting here, alright, is that Euro, because again, it's Forex, right? Now there are different, every pair has its own way, it's its own little like beast. Alright, so they all have different ways of moving, of interacting. So with this, I'm kind of expecting this to go up, come down, and then kind of continue going up. Because everything else right here has come completely down and filled in their respective daily gaps in a way. AUD still got some ways to travel. It's almost 9 o'clock. Are you trading the Asian kill zone on EU? What's the Asian kill zone, Mustafa? Tell me. Alex, no, I'm still in Australia. But so New Zealand and the US dollar is a pair as well, a currency pair that people use to trade. And some people do trade it, and some people don't. So who was in a sell? Was that Alex? Not Alex? Was it Tom? Was Tom in a GU cell? Someone was in a GU cell. Was that the beginning? I'm just going back to that. Hello, hello, hello. Can't find it. Trading strategy guides. I definitely won't pass the whole test in the stream, because again, with my surety model is that the gap is left unfilled on DXY, and then after that it comes back in during this time between 8:50 to 9:10, because just after that what we have is 9:15, which is the Hong Kong Open. All right, again, all of the money in Asia is going to go through Hong Kong, and so that's why that time is so important in forex pairs. So right now, indices and stuff, if you don't trade them, especially like US 500 or like E-mini, S&P, NAS, things like that, really hard to trade, just because there's little to no movement that happens during these sessions on the ETFs, because the market's not open in America. So you only trade that instrument, or those like NAS and stuff, S&P, during the New York session. Hugo, yes, it was you. Nice one, nice one, nice one. Well played. That's it. It's a sell. Look at price. Look where it's going. Funny. See that little gap? A tiny little gap in there? That's been filled to perfection. It's coming up. I'm just going to put up my 5-second chart. I just want to see where price is. Again, I'm looking for my little perfections. This is the 1 minute. It's not good enough. I need the 5 tick just to give me. What price is that? Here we go. 8,414 and 8,411. 8,410, 11, 8,414 over here. This is an equal price. Right there is a perfection in price. What we have right now, exact. This price over here was perfect. Went away, came towards. Didn't activate in my time though. Frustrates me so much. And right now, we're waiting on time. 5:15. Okay, 9 minutes is going to be the, for me, it's the true Asian Open. Is that when price starts really doing its thing. Alex, this is my passion. I still have my first love, which I do. See that little perfection I mentioned before? It's all filling in beautifully. Owen Obier. It's not necessarily when institutions, well, how you can view it is the algorithm is giving you clues. Okay, it's giving you clues that there's like the price is the same. Now, what's happening during that time is that there's a lot of liquidity entering and exiting the market. So price has to go away so they can take some profit, okay, and then come back and snipe anyone that was in there before and then push down. So you can see here there was a little on the 5 tick, there was a little perfection in price over here where it was exact on the 5 tick. Okay, then what they did was they pushed away, they came and sniped underneath there, and then they came back, and then they're continuing. So they're just making sure that there were no people in cells to go lower by sniping this out. Good question. And if you go onto your 5 tick, onto the 5 tick chart, you can literally see it happen all the time. Again, it will go down, it will do this little consolidation thing, okay, where price is literally between 2 points exactly. It's like the same. And then it will go up, and then it will create another one. And then that is the buying and selling points. And then they'll use that reference throughout the whole day. Whether in Asia, they go away and then back towards. And then in London, will generally be the move to either go towards it, or one, if it's already there, it will then go from there and they'll pick a direction to choose, and they'll either go one way or the other way. And then if you have London, New York, they will try and target the same area. Again, it's just settlement price. That's all it is. Every single day, they want to have the same settlement price so that the people who are dealing big accounts, big business accounts overseas, when they're doing these transactions, they want the same price in the different countries. Because if I, for example, am a big business and I get a quote for the day from wherever it is of, okay, I'm paying right now, let's just say it's one spot 08350. Okay, one spot 08350, that's the day. Now, what I would, obviously that's just a random for now, because it's the opening gap. That's the settlement price. But how that works is when that's been set, they send that same thing all around the world, and everyone trades at that price when they're buying or selling a currency. So if you're going to transfer money from euro into dollar, you're going to have to pay them that price. And so institutions or the big money will pull price back to that area so that they can get that full order at the same place. And the same thing in New York. They'll try to get as close as possible. And so the manipulation points come in between that, and that's what you're seeking. You're seeking, okay, they've manipulation, blah, whatever. They've taken price away from the gap or whatever it is, and then what we're looking for is we're looking for a move that's going to go back towards that gap. And there are main times in the day that these things happen. There we go. So that sell side has just been hit. Again, it was another no trade Asia day. But what I see in here though is that this little piece of price over here, if you add that onto your chart, there's a complete void in that price. So let me just attach this quickly. Properties without auto scroll. What I'll do is I'll show you what is a void. Okay, let's be very clear about it. A void is a place where there is no price action whatsoever. Here. So we're just going to zoom in there. As you can see, between that closing price and that opening price, there is no price whatsoever. This is a break in the system. Okay, it means that price will need to come eventually and fill this little gap in. Okay, it's a void. It means that there's a zero price. Okay, it's a draw. I think of these voids as like black holes. They're a big draw. Now, before a draw is seen to, the people who are doing all of this, so here, these are voids in price, complete voids. What happens immediately after the market opens over here? It comes and fills it in. Then it has a reaction, it comes and fills it in. It has a reaction, it comes and fills it in. Perfection. Yeah? And then starts, after that's filled in, it starts doing its thing. That's why there's a little lapping gap down here, but we have a lapping gap there as well. You can go through price, literally, and you just search for these things in price. So let's just zoom in. We have here, there's a void. Next candle opens up here. It's a lapping gap. It closes that price in perfectly. Lapping gap down, lapping gap down. This is a volume imbalance, or a VI. That's also an inefficiency in price. Price goes away from it, and guess what? It comes straight back into that. Didn't fill it in, but has come back to that area. Okay, it's leaving that there for later on so they can come and snap it. Again, we can continue going on here, and you have price where it comes in, does that, goes lower. You literally can do this on your charts, and you can see where all the reactions are happening. And my activation time for my sell would have worked out quite nicely, except we were still within the daily gap. So my background. So I was in the performance industry. Big situations the whole time. We'll go look over here. Wouldn't that just be Ryan Silver? That's also a good question. Wouldn't that just be your broker's thing? Okay, so here we go. You can do it with me. Doesn't matter what broker you're on. They will all have these in price. See this void over here? Watch what happens. No. I was actually a ballet dancer before this. So not that kind of dancing. I was actually doing classical ballet. The same, there's also another void on AU. You can see over here. Let me zoom in. Void in place right there. What model do I trade? I trade shifted market structure, fair value gap, with an inefficiency behind it to give me extra, how do I put it, confluence? How are we going to time? Oh, 9:15 is here. Great stuff. Let me put that in the chart. Where are we? So now Hong Kong gap is set up. It's a nice big one today as well. 15. Ooh, that is delicious. Alright, Alex. You have a good night, man. Take care of yourself. Right, 15. Hong Kong gap. Lovely, it's set. DP, how long have I been trading for? I've been trading for over 2 years now. And what's funny is that ICT was actually one of the first things I found on YouTube about trading when I started. So it was like my initial entry into the markets, and I was just like, what? There's a lot to learn. If you're a new person and you're trying to learn that, it's hard. It's very hard. So I never actually start. I sometimes it would pop up with all this other stuff, but it was like my very first, like my introduction to the market was literally ICT. So I was able to start with his concepts from the very beginning of my whole journey. A315. So that there, if you look at that, let's go closer. Over here, the closing and opening, because that little wick over there, that is price. Alright, so I'll just do that. That is a volume imbalance, because there is price there. But what we're doing is that void, like I said, they are draws. They're draws on the liquidity. You see the same thing happened just up here on AU. Over here. They're draws. Comes back, comes into that price, and continues its move. There's an inefficiency in price. I always get confused by the names. How do you explain ICT trading? ICT trading in very simple words. Very simple. Okay? Is inefficiency. You're an inefficiency trader that spots reversals. You trade inefficiencies in price, because his whole theory is that it's all algorithm based. So like a program in a way that has a bug in it. Let's just say that if you know about computer stuff, if you have a a piece of software, okay, and there is a bug in the software. Now that prevents the software from performing the best. That bug will need to be rectified, all right? And all of these little inefficiencies and are what fair value gaps are what volume imbalances are, voids, all that kind of things, is just a different form of inefficiency in price. So for me, honestly, retail traders consider, like, yes, I am a retail trader because I'm not an institution. I am trading from my time 10:30 until 12. So do you remember I said this void is here? Watch what price does. It's come here and started to do consolidation-y things because it's trying to come and fill this in. But the only problem with inefficiencies in price, okay, is that depending on the time that you go to, there can be so many different inefficiencies and everyone can get very confused by what you're looking for. So basically, what I look for as a reversal specialist, again, like I was saying, by reversal, I consider pullbacks, okay, what other people consider to be pullbacks, I consider them to be reversals. Because price is reversing. It doesn't matter which way it's reversing, it reverses down or it reverses up. It's the same thing for me. I'm just answering the questions quickly. So DP, the glitches. So what they are, these glitches, is sometimes they're left open on purpose. Okay, because what they'll want to do first is what the price will want to do is because it needs to manipulate the human mind. It's to make sure that people are buying and selling and they build up liquidity. So now that we have these inefficiencies in price on the buy side, okay, they are, as you can see here, as it does this, okay, this is all structure in here. So this is answering the other question as well. Doesn't mean it won't go against you before being filled. So Malik Hudson, zoom in closer. Let's remove that. Okay, that is not a VI. That is a VI. So it's an inefficiency right there. So now what we have, again, is they need to build liquidity on both sides, and then it'll go and reach for it afterwards. I trade 4 days a week, Tuesday to Friday. So this one here is a void because there's no price action whatsoever within that. And then this here is a VI, a volume imbalance. Some people have come up with ideas of how to trade because ICT gives you the ideas and the tools. You, as a person, you come up with your strategy, your mode of entry, how to do it. So how I trade is I wait for a break of market structure. So this was a perfect entry, but again, it wasn't during my time. It's like yesterday. My time has to be between 8:50 and 10:10 with 9:30. I mean, 8:50 and 9:10 with 9:30 being like the pullback into it. So what I look for is as you can see over here, structure. Structure means the leg's gone up, it's come down, it didn't break the previous one. It continues to go up. As it comes down, it didn't break the previous one. Continues to go up, doesn't break the previous one. Continues to go up, doesn't break it. Where does price break the red candles here? Breaks it here. After that, we look for fair value gaps or any kind of inefficiency. Fair value gap, volume imbalances, voids in this area. That is your entry with your stops at the height. And then you target 2R, 4R, whatever it is. Or the opposing liquidity. I'm trading Blue Guardian. So Blue Guardian is they use 8 cap as their broker. What's nice is that they have a little special deal where it's only $6 commission per lot instead of $7 like they normally offer on 8 cap. But the spreads, as you can see, like what spread? Is a 0 spread. It's phenomenal. I love it. So as you can see here, what I wait for personally is I wait for a perfection in price, a break away from the perfection in price, and then I target that perfection. See a wolf? Liquidity is a bit low. Yes, the move is smaller, but there are still moves to be made. So this whole move here, this whole trade, if you took it earlier before my trade activation time, which is fine, you could have made quite a how much would that be in percentage pips right now if you took from that fair value gap over there with the highs over here? How much is the measured move? Pip wise, if you think about pips, it's just had an 18 pip move from a fair value gap that I would have taken a trade from. Okay, which is a 5.4R. Calm IT, this is 8 cap. There is some spread. Like I said, EU has really good, it's amazing. GU is not as amazing. It's kind of the average during this time. And then you have AU, which is also kind of the average over here. 0.3 to 0.4. Over here is like a 0.4. Here's 0.76 right now. But EU is 0. That's why I trade EU. Yes, crypto walk. Exactly. I find that it's more like 0.6 pips of a move that needs to be made to make up for that 6 to account for it. So it's just over half a pip that you need to make. If you were doing a the free trading, the spread is between 1 pip to 1.2, and on GU it's like 2 pips. So you're still risking. You just have to have a different model. Obviously, if you're taking 15-minute trades or you're taking 1-hour trades and stuff, like 1 pip is not much. But when you're looking at the 1-minute chart and the 5-tick chart like I do, the spreads matter. They really do. Oh, what just happened? At 9:30 on the dot. Funny. See, void is filled. Now, the inefficiency in price. You're watching it firsthand. It's a break in the system, and it needs to be filled. And yeah, it's not a problem. Spamming your keyboard. I understand it. John Haywood, if you're on TradingView, you won't see those in price. Because TradingView merges, like blends them in. You have to have your price open on a broker. All brokers have these inefficiencies in price. And normally, if you look at like people who do like trendline trading or whatever it is, it'll normally be because price is coming in to fill in some kind of inefficiency. John, which broker are you with? JFC Trader. So this to me right now shows me that there's been news. That's why we wait for it. AUD. I just want to share this quickly with you so you can see it. Stop that screen, present. Yeah. Look at AUD. Where did it react from? And tell me you're shocked. So we have opening gap. Yesterday's opening gap over here. And we have the Hong Kong gap over here. Settlement price. We have our 9.15 over here. So today's new price range is that. So Ryan Silver, like I said before, I have a very specific thing that I look for with price. I want this gap here on DXY, okay, to remain unfilled until between 850 and 910. Okay, so I don't want it to be in here at that time, because that time, as you can see with this consolidation, is where it starts moving. So I would rather see price do this and continue going down, making moves like this and this and this, until we get to that time. Then it has enough range for it to seek the opening gap. Remember what I said? That 1230? See, yesterday? 1230. I put that in there. Came down. 1230 on the dot. Came and took that. Came down. Came back up during FOMC. Shocker. GBP. Same thing. 1230. It came back. Came up to 1230. Shocker. It is a huge gap in EV. I know. And it has to be filled. It's actually leading me to believe that there's going to be some buys soon. But again, I'm not in. My trade time is not here. So it's another day of I just sit and wait. Because AUD is moving quite aggressively to the buy side. Okay. We have GBP, which looks like it is going to start. Okay, because GBP and Euro, they're master manipulators. They're master manipulators. It's dodgy. Okay. Okay, now, other concepts. Here we go. Enjoy this. You're all looking for levels in price. See these levels I have on my chart here? I don't show that all the time. You want to know where price is going to and going away from? Alright, big levels, round numbers. 1.08,000, 1.09,000. The prices that are in between that, the ones that you look for, are the 200 and the 800, so 88 and 82, and the one in between that is 8500. I don't put that on because it's in the middle between those two. Okay. You can see that price respects these points quite spectacularly. Goes down to the 500, which is over here, and then comes right back up to a big round number, 200, bounces off, goes up, balances, goes up to the almost 800, but it's at the 500 over here, comes back to the 200, almost a round number, and then continues. So that's basically round numbers in a nutshell. And yes, it was an ICT concept that he introduced to everyone like 2016. One of his very, very old videos. It's not something that I created. So as I was saying, Euro and GBP are master manipulators. And what they'll do is they'll have a difference in that GBP will like do something and make the correct move that's supposed to happen, and Euro will just continue pushing lower, or vice versa. Okay, it's quite sneaky. You see what's happening right here on this pair? We have that opening there where when Asia opened over here, it didn't fill the top of this Hong Kong gap over here. So that's the max that's filled. It needs to come and fill that in. How do I learn to have patience? Do I do something specific? So there's a question before where they were asking me what I did before, as I was a ballet dancer, okay? And it is performance, okay? It's a live performance where you are dancing in front of thousands of people and they pay to watch you, okay? To watch the company that you're in. Okay, and so yeah, I'm expecting, because again, remember, so yesterday we have these equal things. It's too perfect. What does that lead me to believe? That price is going to rip. It needs to seek liquidity. And where's it going to rip to? Well, we have the imbalances and stuff above price in here. On GBP, on Euro, it's up here, and that aligns with that square, perfect square liquidity in there, which aligns with the Hong Kong gap, because price now is going away from the gap, and it's going to pull a little reversal, because I call it reversal. Doesn't matter any switch. It goes up, it reverses down. It goes down, it reverses to come up, reverses to go down, reverses to come up. It's all, to me, that's all reversal. So yes, dealing with pressure situations all the time in high performance modes, you learn control. So I can have the chart. You can see I have my broker open. I have my but what I don't have is I'll show the broker again. Let me just stop this. Present, share screen. Okay, share. Now, what you can see, what I've done over here is I have my instruments. So if I was looking for a buy, okay, I would have this open and I'll have it ready, and I'll be waiting for price. I'd literally be waiting for it to do what I wanted to do. As soon as it hits my criteria, I would hit buy and it would open my order. But I keep it away. I don't have the buy and sell button open like this. That just entices you to get in. And I just wait. It has to do what I wanted to do within the time that I wanted to do it in. If that doesn't happen, you don't do anything. Okay, so again, we're talking about performance. Now, trading is a high pressure performance situation where you are trading money, you're risking money to obviously make money, and that is quite a stressful situation. I'm not gonna lie. Okay, this is a perfection in price right here. 8180. What was that price? $8180, which is there. And 8170 is here. This is what I refer to as my perfection in price. Okay, right there. This to me is an indicator that obviously with after consolidation, there has to be an expansion. There's only two things the market can do. They can consolidate or expand. Okay, or reverse. Okay, sorry, three things. So consolidates, it's going to need to expand, and then consolidate again, and then expand again. Doesn't matter which way it expands, it's an expansion. Then we have, so for example over here, it has a consolidation, expansion, consolidation, expansion, consolidation, expansion lower, reversal, consolidation, expansion, and it continues to the other side. We then have consolidation at the top, expansion, expansion, expand, and a consolidation in here to expansion, consolidation, expansion, consolidation, expansion, and now we're in consolidation again. This is an indication to me right now what price is doing, that they are pulling people into the market on both sides. So what I would wait for generally is for them to either do two things. They are going to expand up to then pull in people to think that it's a buy, okay, and then they pull price lower, or they expand price lower. They will expand it lower to pull people in, thinking that it's going to be a continuation trade, a continuation sell, and then they reverse it on a dime, and then go back up in full liquidity. When I see things like this, it's like a tell. Mustafa, you haven't told me yet what the Asian kill zone is. So is this happening on here? That liquidity right there, that was traded away, scene 2, and then it's amazing. Like I said, that was a target, and then it came down. Oh, you said I must have missed it in the chat. Sorry, 6 p.m. to 9 p.m. That is for me, not the Asian kill zone. For me, the agent kill zone is between 850. Okay, between 850 over here. And 10. This for me is the Asian kill zone. In my eyes. Because what I see a lot of times is that when price goes like this, for example, before the time and starts bouncing down, there's not enough range for an actual gap, an actual target to have a profitable trade. Even though at 850, yeah, it does. There's gaps and stuff, and oh, you can't see. Sorry. Present. Okay, so here with price, you can see over here. So with Asia, I've kind of formed my own time parameters in it. I have my own my rules, okay. And what I see is that obviously this here, you can see that it's fair value gap over there, okay. That fair value gap over there is target. That's why that's drawn out on the other chart. That is a fair value gap. Price break structure goes down, 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 and then 850 it has a continuation. Now, what I would for me, because this week has been a big news week. It's one of the reasons why price has done this. The times are slightly off. Okay, it's not as specific time wise. So what they do is they moved it before. They moved it from 750 and 810. That's when they triggered this. Now I only come onto the charts at 830. No, 930. No, 830. I come to the charts. That's where I come on. And I expect this move to happen within my time frame. And if it's not there, I don't trade. It's as simple as that. Because the challenge is infinite. Okay? As in, you have all the time in the world. You don't need to risk. So I'm actually expecting next week to present the opportunity that I want. Okay? Yeah, Mustafa, because I found there's a lot more consistency if this kind of structure gets formed during that time. It's a lot more consistent in the long term. You have a week like now where it's news week, and they'll pull price at odd times. They do things that are like this is a retail trader's dream. It just continues to go up for days, and retail traders make a lot of money doing that. That only happens like 10% of the time, or maybe 30% of the time. The rest of the time, the market's doing this. It's in some form of consolidation. All right, there's a humongous drop, and then how as a retail are you going to get into some kind of MA trendline kind of strategy? If it goes down, it comes back up, snaps you then think, okay, well it's a continuation trade here, and then well you wait for that trend line and you buy there for it to go higher. Guess what? It goes lower. Yes, I'll be every single week. I'll be Tuesday, Friday. I'll be right here with you all. Nice. So they're doing drives right now. Something I call a driving factor. Okay. If we look at price, when you have moves like this, okay, normally, but there's a lot of consistency in complete measured moves. So if I were to take this over here, okay, let me just take my fib tool, and I were to draw from this high to this low over here. If I take that and put it down, you can see how that move is exact. Okay, so we have a drive, that's one drive, the second drive, and then the third drive will be perfection of price, pull away, and then I'll expect something. Because AUD is filling in beautifully. To the target at 9:30. That move though, at 9:30 on the dot, is almost impossible to get in. It's just like the FOMC event. Like there's no ways that you can enter that move unless you had your buy right there. All right, Mustafa. Good night, good night. Take a quick look at UJ. Same thing, didn't trigger within my activation that I would want. Yes, it's ripping. USD is getting stronger. That's what that's showing me. Because again, this is USD against the Japanese yen, which means if it's going up, USD is getting strong. If it's going down, Japanese yen is getting weaker. But we have AUD getting stronger. We have GBP going weaker as DXY continue to go up. So your DXY chart and your USD-JPY chart would be relatively the same thing. You can see. But that again, this over here, this is what I would. That is my optimal kind of trade. On DXY, I'll show you one. Where it was literally beautiful. It was just stunning. It was on this day. Yeah. But they shenaniganed. Okay. Can't go back further. But you see what price does? It leaves this kind of open after 7:45, and then what happens is price goes up, it goes up, and then at 9 o'clock it decides 8:50 to 10:10, it decides it's going to start going lower. You have your entries and then you try and drive down to there. Didn't happen there. When did it happen? Didn't happen in London at 3 o'clock, although that could have been a trade, because my bias is always the opening gap at that time. That could have been a trade. Then you have your next engagement time, which is 9:50 to 10:10. And we're targeting that. That was Monday, I think. Not Monday. Yeah, Monday. So when I'm trading every session, maybe I should just pull this out because this is a weekly gap and it's important. Weekly gaps are very important, right? It's like the one you actually leave on your chart. just leave them on your chart. There, all the little price action respects that happen within that, and it's phenomenal. Where was it? Yeah, it happened again at 8. This week's just been trolling me so hard. Didn't work there. It happened and get activated later on. It's been a troll week. So we have that first drive, that second drive, and as I said, the third drive is here. And it's a bigger expansion move. And how is everything else? So if you look at this, it's continuous. Whereas this has just come as being continuous, and it's hit different drives, and now that candle right there, 957. There's a void in price as well, a sight one in here. That I would consider that to be the ICT 2022 YouTube model. Okay, that would be the bottom, and it's going to come here. Do I find streaming makes me more disciplined? It's kind of the same. I treat it as the same thing. Just because so here we go. So the difference over here between those candles, you can see what's happening. That price has gone lower over here, whereas in euro it's now a little bit higher. So we're getting a slight form of SMT in play. But I wouldn't trade this again because again, it's not my time. I'm looking for my time. Trades in a week. Like I said, on this, I might take maybe 2 or 3 trades in a week, in Asia session, depending on what kind of week it is. Like this week I've taken 0 trades because there's been nothing in time for me to actually engage with. So let me just pull this in the 5-minute quickly, and I'll show you previous. So we have 14, 15, 13. That was Monday. Before that, we have Thursday, Friday. So that Thursday, yeah, around here, 7:45, open. That's the opening gap. And then we have if you have all the time in the world, There's no point in just YOLOing and risking. Like, there's literally no point. Because it's not going to do any favors. Yeah, and that's the Hong Kong gap. So, right here. That was Friday. Opening gap, Hong Kong gap. Look how price has reacted. If you could pull that out through time. Phenomenal, isn't it? Phenomenally consistent. Now we're going to the previous day. We have opening gap between, so 5, open, 45. Opening gap. Here's the MMG. I'm still waiting for that. That needs to get filled, and it'll either start the move today to go lower and go there, or tomorrow you're going to see massive rips. It's exciting. It's exciting. All right, cheers, Terry. Take care of yourself. Nice to have you in the stream. And then we have Zach, very conservative. Yeah, being conservative is a good thing, actually. You know, it's a very good thing. Just because, again, you have infinite time on the challenge. You don't want to just waste. You don't want to waste your opportunities. You want to get the right trades at the right time, and just do it consistently. So what's my trading time? My trading time is between 8:50 and 9:10, and I can draw that out to about 9:30 at tops, and that's what I would expect price to do its thing. As you saw today, 9:30 on the dot. What did price do? It just ripped. And then we have, what do you mean by the Hong Kong gap? Hong Kong gap is something that I made. Okay? It's because Hong Kong is a big institution. Or not institution. It's a big like central banker hub for money to be flowing into Asia and out of Asia. The times that market operates is this time is all New York time at the bottom here. I correlate it to New York all the time, just so that everyone in the world can understand, just like ICT does. But 9:15 is when the Hong Kong markets open. 2:59 is when they close. So between those two, there's a gap in price. Okay, that gap in price, as you can see over here, gets filled to perfection. And then goes up. Like I said, I think it's more accurate even than the opening at the daily open on DXY. But I use that as my trade at 9 o'clock. So over here, you can see price goes straight there into, didn't fill it in, but it went and filled in the rest of the Hong Kong gap. The next day, our Hong Kong gap opens. This hasn't been filled. So there's been no settlement at this price, which leads me to believe that there will be lower prices in the future. You pull this price out in time, you can see how it responds and reacts to it perfectly. Perfectly. Like it's phenomenal. Hong Kong gap to Hong Kong gap. Oh, look at that error. There's been a break in market structure right now as well. Oh, this would make me want to trade there. But again, emotions. If it's not within my time, I don't trade. Even though right now, it looks like it's going to come here. And you can see the same thing on DXY. It's just taken the high, that liquidity over there, and it's gone within the previous day's opening gap and Hong Kong gap. And we are having a move. It's funny. Like I said, draw these times and stuff out in your charts and just observe the reactions that happen. And then after that, like what I do is I use them as targets. So I find the most optimal time. Okay, I'll just find the optimal time where, okay, every single day, what do I look for? Okay, this sets up. When's the best time for it? When does it target this every day? So, consistently, like with yesterday, okay, again, it didn't work there. It happened at 10. The move switched over, 10 o'clock. It came and filled the gap. Now, because London starts, London is now going to target the gap at settlement price. We have New York. It sets this perfect. Remember I was talking about the square, okay, on all other charts. What happens is price pushes away. We have drives. So I would consider that one move. It's one move. That's one drive. There's a second drive. And then the third drive didn't push all the way, but then it started coming up. News came out and bang. It targets that liquidity. Ultimately, that was the 12:30 candle. And then comes up and comes into your previous Hong Kong gap, which is not mitigated by New York. So something needed to happen. This has not been reflected on Euro. The previous day's opening, New York hasn't come here, but what we have is AUD came perfectly into it every single time. DXY, this is coming in. Euro again. Now, I keep on alluding to what this MMG is. Okay, let's get into it. This MMG is a very specific thing I look for on a Wednesday between a certain time. Okay, so I literally see the 8th over here. Let's go back in time to 1 week before. Let's make it a Wednesday. At the time that I want. So yeah. This is what I refer to as my MMG. Price usually comes there on the Friday. It tries to target the MMG. What's that day? That's a Friday. Didn't get there, so what did it do? It waited for Monday, Tuesday to come back. As soon as it reached there, guess what? Trades happened. Let's go to the previous Wednesday. At the time that I want. What is the time for that MMG? Mid-morning gap. Your gap is between 4:29. Okay, but you don't see on the 5 minute. So it's 4:29, which is this one here. I'd say the 4:30 open. Okay. It's closest to 4:29 on the 5 minutes. To 5:15. We're looking at what, 6, 5:40, 4:55, 15, open. There. That's the MMG. Mid-morning gap on a Wednesday. Okay, that's important. That gives me bias. Alright. Looking at this stuff over here. What's price to? It comes down. Thursday. Friday. It tries to reach for it, but it can't. Where is price come to the next Friday? It sets up the MMG and comes up on the Friday. So for those people who think Friday is untradeable, they just don't have bias. That Friday is set up. Let's drag this MMG out in time. So it goes back to the previous MMG. Then it goes back up to the MMG because it's not filled. Now it's filled. Funny how all of that is perfect. Let's go back another Wednesday. Let's have a look. Monday, Friday, Thursday, Wednesday. I think this one is unfilled. It's the out of 7 out of 10 weeks, the Wednesday will get covered on the Friday. Here we have 4:30 or 4:29 to 5:15. Open over here. Thursday, Friday comes in. Doesn't fill it completely, but it's filled and it goes away. Let's go back further. Now let's do another Wednesday, just for the lols. One last one. Just for the lols. Nice and fun. Oh, that was the big news event. I remember that day. Because that MMG was my target. So I went up, came down on the Thursday. Nice. Let's go back on another day. Wednesday. So I consider them to be very, very important. Yes. In my version of trading. Again, other people can say whatever. I consider them to be consolidation points. You never want to be trading on Wednesday at that time because it can be quite risky, because it's generally a lot of consolidation that happens at that time, especially on a Wednesday, because it's setting up the week. Okay, so open there. And we have 15 over here. Open is down here. You can consider it a point of interest, you consider it whatever, but on the Friday, Thursday, it came in and used it to bounce up, to bounce up, to come bounce down, to come towards it, to go towards it, especially on the Friday, which is over here. Use it, went away, came back to it. Not London, during the optimal trade time with ICT, during New York, it traded to that. And we go back some more. Quite funny. This is something that I discovered on my lonesome that no one ever talks about. And how did I find it? That's the question. That's the real question. $30 is here, open. 15 is there, open. As you can see here on the Wednesday, it's consolidation. As soon as it breaks away from it, I want to target it. During what time? Oh, London comes in here. Not London, New York. Between 9:50 and 10:10. Targets the MMG. Next day, we have the switch over with big news. What does it do? It comes and targets the MMG. Ah, it's very consistent, isn't it? Works very, very well in consolidation markets. Don't you think? Very important pieces of price those Wednesdays. See that Wednesday? No one expected it to go all that way. That was my bias. My bias right now is for it to come after all of that, to come to here. Looks super consistent. So where does this time factor in? How did I find it? So let's just go on to, doesn't matter what chart it is. This is your Hong Kong gap. As you can see, it's very clear. So the Hong Kong 50, that's the Hong Kong gap. That's why I call it the Hong Kong gap. We go look for consistent breaks in price on the 1 minute. Where's a consistent break? Not there. In the morning. Yes, I've gone through every single one of these candles with a fine-tooth comb. And this presents every single day. You see the disparity between this 425 and 515? We go through the candle, 22, 3, 4, 5, 6, 7, 8, 9, 515. Wait, hold on a second. 429 to 515. Closes over here, it opens down here. That in price, that is the mid-morning gap. That's what I call it. We draw that out. Let's go look at price. Interesting. Then we have the next day. Same thing in price. Go look at the morning. Go through each candle. 429. 515. Oh, it happens every day. What a shock. Open. A close and the open. Funny. Let's go back again. Let's get excited. Some more. Because we're learning new stuff today. I can see it right there. It's very clear today. Between the close and the open. 29, 515. Every single day this happens. But for me, the consistency comes in. You see? Every single day these things present. Can you repeat how you measure the Hong Kong gap? So, Hong Kong gap, seeing as I have Hong Kong open. What are we looking for? How do we measure it? Time. 2:59. So, put a thing like that there, 2:59. What's the open here? 9:16. Okay, 16. That is how you measure the Hong Kong gap. After you have that in and you've labeled it, you can just remove everything else. You don't need. You don't. I use just the times. I don't use the colors. I just do that visually for you. But once you have these concepts in mind, your bias is very clear. It's very, very clear. And then all you do is you look for moves to those areas. What I found was that, as you can see, Hong Kong Gap every single day formulates at the same time. 59, 916. That's a Hong Kong Gap every single day. Price goes away from it, comes back to it. You go to the next day. The next day is over here. If you're trading this indice, like I don't actually trade this indice at all. Okay, the Hong Kong Gap is here. The close of that candle and the open of that one. Hong Kong Gap is there. Goes away, goes towards it. Goes away, comes back towards it. You can see. It's consistent things in price. These times every day are normally very similar to each other. Okay? So that's the MMG. I found Wednesday to be the most valid for the week. So if you're looking at for a weekly bias, we're looking at the Wednesday MMGs normally. But the Wednesday MMGs for the following week. So the MMG that happened yesterday on Wednesday, I would want to be using for next week's bias. Not for this week, for next week. There's the gap, the mid-morning gap. That's what I call it, as always. Mid-morning, how's it? And guess what? Price goes away, comes towards it. Price goes away, comes towards it. So let's correlate this into our charts of our mid-morning gaps. So we have the Wednesdays, which normally reflect the following week. If we go into price, this is on the 5 minute, it'll be 415 and 429, which is over here, the open here, until 515. That is a mid-morning gap. But it didn't work. 430 until 515. Because it's only going to work. Didn't work there. See price pushed away. And then what happens as it's coming towards it? Funny. Then we have our previous day. Yes, Anthony Everett. Something that I discovered on my lonesome. But I give ICT props because without him talking about how he just discovered things in price, I would never have discovered this myself. Period. So we go back in time over here and we go look at our, always the consolidation, you see. It's interesting. We don't want to be trading in that time. The open and 515. Yeah, that's a very tight one. Yo, that is super tight. That's like the same price almost. Okay, let me just open it a little bit so you can see. Price goes away, comes down. The next day, price goes away, comes up. Your MMG. Funny. And that was there. Anyway, I just look at this and you think, how is it not correlated? How are the markets not the same? We go to the next day, previous day, sorry. Let's go. This was the low. the super low on the Wednesday. Okay, came down, tapped it, came up to here, consolidation in that time. After the open, 515 should be up here. So if you're ever confused between 9:10 and 10:10 New York time, where did the price go to? Shocker, isn't it? Let's take another day, just for the fun. Last one, then I really have to go. Consolidation at what time? Every day it's the same. Why? Because that is when this gap is being formed to the open. What does price do? Smashes it. Then guess what? It comes straight back into it. Then there's consolidation at that point because it is a buying point and a selling point for institutions. Funny. Anyways, that's enough education for the day. You're up to speed on what I look for, how I look for it. And hopefully tomorrow will bring the trade that I want. But again, if it doesn't, that's okay. It's life. Having these things out on your charts are very interesting, and they work in correlation with... Oh, I didn't put the 915 on. Yeah. $915 close. So I put the 915 close because that's the 916 open. That is your big Hong Kong gap today. Yeah, that's basically it. What you're gonna want to see is you're gonna want to see price go away from it, and at some time it's gonna turn and go back to it. When you figure out what times they are most precise. So let's go have a look at what times could be very, very precise. So 950 and 1010 doesn't work there. Okay, this is a news day, so don't like news days that much. But as you can see here, this would have been in this area your opening gap and Hong Kong gap. Okay, then we have it goes away at around 11 over here. It switched to come back, and then 6 o'clock it switched to come back down here. After London, New York, it decided that it's going to start making its way back to it. The previous day, let's just pull that up. Same thing. We have the open. We're somewhere in this area. What times do we have? There's a little push at 11-ish to push it up on GBP. And then we have midnight push to go up. And then London comes in, it needs settlement. New York comes in. It tries over here to push down, but New York didn't settle, so we draw it out. And then price the next day does its thing and comes straight back to it, like it's doing today. Because yesterday, we didn't come in and fill this price during New York. So there we go. Anyways, I hope you found lots of value and some content and enjoyment in this. Oh, I hope everyone has a lovely, lovely day. If you haven't already, just like the video, give Trading Nuts a little, drop him a like and a subscribe, and follow his channel. And if you do, you'll be notified live of when I go on stream every day. Tuesday to Friday from 1 hour and a half to 2 hours. And yeah, I'm on Twitter at, I'll just put it in here. There we go. All right. So have a lovely, lovely day, everyone. If you notice these things in price, you can pull them onto literally any chart you want. It doesn't matter if it's an indice or a commodity or whatever. So let's just do a quick commodity. Let's do gold for a second. Okay. Gold. Let's do a previous day quicker. Let's do that New Year's Day, of course. Here we go. So you can do the same thing. If you want to just do anything, you make sure it's the Hong Kong gap. Yeah, the open is 9:59 is the close there. And then 9:15 should be around here. Closing. That is your Hong Kong gap on gold. Precise, isn't it? Goes up, comes down, goes up, comes down, goes up, and in New York it comes down. Settlement price. I don't trade the HK50 just because there's a humongous spread on it. It's massive. It's absolutely massive. No ways. I'm a scalper. That is what it's. I don't consider myself to be a scalper because I don't trade like the 5-tick charts. So let's go look at the previous day on gold. Okay, like I said, you can put it over to any chart. I don't actually trade gold, but 59 close and 9:15. So if you are a gold trader, closing of 9:15. Hong Kong gap. Let's pull that price out in time. Oh, isn't that funny? Once you see price the way I do, your life will change. It will literally change. And you'll be like, there are so many possibilities. And then all you need to do is do your backtesting, do your research on whatever instrument you trade on. And you can see at these times over here, okay, we have that movement goes through and at midnight it comes in. Wait, that looks like a pattern. At midnight, 1 o'clock, it comes in. There's already a little pattern there, a little kind of trade idea that could be worked with. But look at the next time. What's this? Oh, this is London, no, New York. Comes into the gap. Then after that, it makes its move. We have moves over here, and then it makes its move. So let's go on to the previous day. This is how you can just spot it. You just look, have a target, have a bias. That's it. Literally all you need in your life. It's that easy. You can literally just use any trading instrument. You can see the correlation. I'm doing this randomly. I don't, like I said, I don't even trade gold. So we have 259 over here. The closing of that candle. We're going to 9:15, which should be over here somewhere. So the closing, 9:15 there. Closing of that candle there. Closing of that candle there. 9:15. 9:15 there. Closing of that candle 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 there. Closing of Okay, there's your Hong Kong gap. What does price do? Let's look at midnight. Let's see if there's a correlation. Almost. Almost. Let's look up here. What happens in New York? Oh, it comes down to there. Let's do it another day. One more. Just for the lols. Just for the fun of it. Because we can. Okay. Because gold's fascinating. 259. Closing. Whenever I see something like this, I look at what's right next to it. And I think, like, how precise is that? And it blows my mind. I have 9:15. 15. Closing. And so this is our Hong Kong gap that gets set up. That is a target. Comes down, goes up. Comes down, goes up. Consolidates a massive bunch, goes away. Look how precise price is. People think I just joke. Okay, last day, last day. Let's do the last day for the fun of it. Just remove these. Hopefully your minds are going to be blown. Like I said, once you see the market the way I see it, you can come up with whatever trade strategy, whatever trade idea that you want. It doesn't matter. Just look at how precise price is. It doesn't get better than that. It literally doesn't. 9:15. Close of 9:15, open of 9:16. Here. You can see even before that's been set up, that is where price is very precise. And then all you need to do is find a time that you want to trade it at, whether you're a trend continuation trader and you see candles doing whatever, and then it's precise and it's exact and it will work over and over and over and over again. Because over here you can see up here, that was when New York started. This has not been seen to by New York. So what is our bias? Our bias, because it's not been seen to, means that I will be taking short trades to continue, keep on coming down to the price where it needs to go to, because it's not in balance. It hasn't been settled. It goes from this Hong Kong gap straight up to the previous Hong Kong gap. Comes back down, sets up another. Anyways, you can go and do your back testing and your research and however you want to do it. You have the tools now to become monsters, literally. Just find your time and then find where it correlates the most, and then you can design whatever trade strategy that you want. Just make sure it's the same and the times are the same. Anyways, like I said, if you haven't already, drop a like and have fun. This works really, really well in consolidation markets where people are like, I don't know what's going on because it's going to go sideways. It's tradable because it goes sideways most of the time. The rare days that you have huge moves like this, okay, these are rare. They only happen every now and then. Most of the time, it goes sideways. And so, if you want to make money, learn how to trade consolidation. Simple. Anyways, have a fantastic day, night, afternoon, whatever it is for you, and have fun doing some backtesting. Because I know some of you aren't going to sleep tonight. When I found this, I literally could not sleep. I was like, I think I've cracked it. I cracked Asia. I know what's happening in the market. I know where liquidity is. I know how this is all happening. And it's precise. It is precise to the pip. You can see here, this previous day, precise yesterday to, like, what, by margin of what, 18 and 34. Okay, up here, not even $1. And then it makes something, there's a break, there's lots of fair value gaps, however you want to trade, whether you're a consolidation trader or you're a trend trader, if you want to draw lines, whatever you do, if you see the line break, then you take the trade off the line at the break, or like however you do it. You set the high, you go to your low. Me personally, I trade with the ICT with fair value gaps and stuff. So if I was looking at this and I was there at that time and I knew I would be looking at this consolidation, I'd be waiting for a break of structure, which for me, that would need to break over there, and I would enter on the fair value gap, which there is no fair value gap, so I would wait. Do anything, there's no fair value gap. Over here, there's a fair value gap. For me, that would be my entry. Right there. My highs would be wherever you're mentally secure, and then you take your trade. Or you could do the opposite, which is when you're outside of the of this, which is what I do. I use this as a target. So this is a target every day. And what I do is I wait for price to show me that it wants to go back into it. So there's been massive moves over here, like on Monday over here. Then price break structure over here. And I'm looking for fair value gaps in price. This one was not traded to. The one above it was. So it doesn't matter when you're trading, how you're trading, what you're trying to spot is you're trying to spot movement and where it's going to. Bias is one of the hardest things to get, but if you have your bias locked in and it's solid, you've 90% there. And I'm not even joking. You're 90% there if you can do that. Let's just do this for luck. 9:15. Frozen. Like, look at that. Just it's phenomenal. So yeah, whether you're on the 5 minutes, if you see up here, that again, that sets it up. And if you've just deemed that on certain days that that this activates at 12 o'clock like it does over here, that would be a breaker structure. You then have a fair value gap, and you trade that either to the fair value gap, or if you think it's going to go further, you can go more. Like I said, I don't trade gold, but that to me looks like a very consistent time. Yes, this gold gives you massive R's. Holy cow. Yo, that's in a 5 minute. Imagine if I was doing that in the 1 minute. Damn. Maybe I should actually trade gold there. Who knows? We should do a little goldy thing. Let's look at midnights quickly. Let's have a look at them. There's midnight. 9:15. That's too close. Yeah, and chops. Let's go to the previous day. Over here. Go look at midnight. Midnight wasn't consistent, so went down. This midnight changed. Go look at midnight. And if our bias was from here to here, there's a buy. Consolidates. There's no breaker structure to the buy side. You would have to wait until here, just like London. So yeah, just do your back testing, do your research, and have lots of fun with this. And like I said, this Hong Kong gap is a thing. Just like the Daily Open, it's a thing. Okay. Cheers everyone. Take care of yourselves. We'll see you tomorrow. Bye.